Hey investors, welcome back to Stoxpot, your go-to episode to unpack what's happening around the companies listed in the stock market. It's me, Lekshman M J, with some insights into the latest quarterly performance of companies operating in manufacturing and financing sector. So without any further delay, let's get started. First up, let's talk about Muthoot Microfin Limited, a leading NBFC microfinance institution focused on empowering women entrepreneurs, especially in rural India. In Q3 of this financial year, this company reported an 8.3% growth in its gross loan portfolio and a solid 23.1% increase in net interest margin. But it hasn't been all smooth sailing. The microfinance industry faced a tough year due to macroeconomic uncertainties, and this company also felt the heat. Its GNPA rose by 74 basis points, reaching 3.03%, while net NPA increased by 40 basis points to 1.27%. Despite these challenges, the company took a proactive approach by maintaining high provision to address over-leverage concern prevailing in the industry. With its disciplined and data-driven underwriting policies, Muthoot Microfin managed to balance asset quality and profitability. Looking ahead, the company is optimistic about recovery and is focused on achieving its growth and profitability targets. Next, let's shift gear to Aadhar Housing Finance Limited, a key player in providing affordable housing solutions to India's economically weaker sections and low-income groups, particularly in semi-urban and rural areas. In its third quarter, Aadhar Housing Finance delivered impressive results: a 21% growth in asset under management, a 22% increase in profit after tax, and a slight improvement in GNPA, which now stands at 1.36%. The company says continuous government support, urbanization, and rising demands as key growth drivers. With the recent budget announcement on income tax relief, Aadhar Housing Finance is poised to benefit from increased purchasing power among lower and middle income groups, which should drive the demand even higher for housing loans in the coming quarters. Now let's move on to the manufacturing sector with Happy Forgings Limited, a leader in high-precision, safety-critical forged and machined components. In Q3, this company reported a 3.6% revenue growth and a 6.6% increase in EBITDA, supported by an 80 basis point expansion in EBITDA margins. The company's growth was driven by higher realization and strong contribution from industrial and passenger vehicle segments. Looking ahead, Happy Forgings is making a bold move with 650 crore investment to establish advanced forging capabilities in the heavyweights components segment. This strategic move is expected to drive long-term sustainable growth, particularly in industrial and export markets. Finally, let's talk about Balu Forge Industries Limited, a company known for its specialized engineering solutions and precision machined components. This company had a stellar Q3, with revenue growth skyrocketing by 73.91% and EBITDA surging by 106.95%. This company also achieved a 4.2% expansion in EBITDA margins on the back of operational efficiencies and focus on high-margin, value-added niche products. Another interesting point to note at this moment is that the export sales played a significant role here, with rupee depreciation leading to higher forex gains further boosted the profits by 134.09%. Going forward, Balu Forge expects revenue to grow by 55 to 60% in FY25, driven by new customer addition in sectors like railways and defense. EBITDA margins are also projected to reach 25 to 27% in FY25 and a sustainable 30 to 32% by FY26 following the commercialization of its new plant. Before we end the session, here is a quick explainer of the words that I used today in this podcast. Now let's see what's non-performing asset. Any loan from which the bank has not received interest payment or the principal amount in the last 90-day period or more is considered as non-performing assets. To mitigate the risk that arises from these defaults on loan, the banks usually set aside some amount called provisions. Having said this, now let's see the difference between gross NPA and net NPA. Gross NPA shows the total non-performing assets from a bank's loan portfolio, whereas net NPA shows the non-performing assets after allocating provisions on total NPA or gross NPA. With this said, now let's see the meaning of another word that I used while talking about forging companies. So what is forging? A manufacturing process that involves shaping metal into desired form by hammering, pressing or rolling it is called forging. And that's a wrap on today's episode of Stoxpot. We have covered some incredible performances, strategic moves and future plans from Muthoot Microfin, Aadhar Housing Finance, Happy Forgings and Balu Forge Industries. These companies are not just navigating challenges but also setting the stage for long-term growth. If you found this episode insightful, don't forget to follow and share it with your friends. Stay tuned for more such deep dives into the world of stocks. Until next time, it's me Lekshman M J signing off.